So, how are we thinking about the US dollar here, Audrey? Are we at the levels? Are these kind of the new normal for the US dollar, and where we were maybe the beginning of 2025 was overbought, overvalued? This is where the dollar should be. Is that where the market is kind of weighing out right now?
I think the market is just waiting for a new trigger, Paul, on the dollar and on the currency market in general. We've talked about the structurally bearish view on the dollar. The theme has come and gone. We've had different episodes on tariff headlines, but those tend to fade very quickly. On geopolitical headlines, again, these come and give you a leg lower in the dollar and then fade very quickly. But I think the market ultimately needs the cyclical narrative on the dollar to turn to be more confident.
One of the most important points of conflict in this war that the U.S. launched against Iran has been the Strait of Hormuz. This is a very narrow strait off the coast of Iran in the Persian Gulf, and this is the single most important oil transit choke point on Earth. Every single day before the US started this war, 20% of the global oil supply traveled through this very narrow strait. And in response to the US-Israeli war of aggression, Iran decided to close down the Strait of Hormuz. However, this is where things get very interesting geopolitically, because the Iranian government has announced an exception. Tehran has revealed that it will allow Chinese oil tankers to pass through the Strait of Hormuz without any problems. But it's not just that. An Iranian government official also told CNN that Tehran will allow other countries to send oil tankers through the Strait of Hormuz under one condition. They have to sell that oil in China's currency, the renminbi, also known as the yuan.
What if I told you the most powerful currency in the world could lose its throne? And when it does, your savings, your job, even the price of food could change overnight. Right now, the US dollar sits at the center of the global economy. Around 80 to 90% of international trade is conducted in dollars. Oil, gold, global shipping, almost everything flows through it. That means when the dollar moves, the world moves with it. But here's the part most people don't realize. That power is not guaranteed. If the dollar loses its status as the world's reserve currency, the consequences wouldn't stay on Wall Street. They would hit your daily life. Fast. Prices could rise, imports could become expensive, governments could struggle to manage debt, and suddenly, things that once felt stable wouldn't be anymore. So what's actually happening right now? For decades, the dollar has dominated because of trust. Trust in the US economy, trust in its political stability, and trust that no matter what happens, the system will hold. But cracks are beginning to show. Countries are slowly reducing their dependence on the dollar. China and Russia have signed trade agreements using their own currencies. Several nations are exploring alternatives for oil trading. Even central banks around the world are quietly increasing their gold reserves instead of holding dollars. That may sound small, but this is how shifts begin, not with a sudden collapse, but with gradual movement. And here's where things get interesting. The dollar's dominance isn't just about trade. It allows the United States to do something no other country can do at the same scale: borrow cheaply and print money without immediate consequences. Think about that for a second. When the US prints money, other countries absorb the impact because they use dollars too. It spreads the inflation globally. That's a massive advantage. But what happens if that advantage disappears? Now we move into dangerous territory.
Basically, the global economy is dead. This is the GCC country. Around the year 2005, they started to have massive account surplus. What happened in 2005, 2004 that made these countries really wealthy? All right, China. China wants to develop its industrial base. And how do you do that? By importing oil from the GCC. And that's why we have the skyscraper, malls, the roads. And then the GCC would take this money, invest it back into the American stock market. But not just that, but they would invest it in Africa. They would invest in infrastructure. So for the longest time, the Chinese economy and the GCC are the two main pillars of the entire global economy. And what this means is that the GCC no longer export oil. This is going to have a major impact on China. And together,
Because if global demand for the dollar drops, the US can no longer rely on the world to finance its deficits. Interest rates could rise sharply, government borrowing becomes more expensive, and that pressure starts feeding into the entire economy. Mortgages, loans, business investments, everything tightens. But here's what most people are missing. This isn't just about economics, it's about power. Reserve currency status gives influence. It allows a country to impose sanctions, control financial flows, and shape global policy. If that shifts, even partially, the balance of power changes. And that's exactly what makes this situation so unusual. We've seen this before, just not in our lifetime. After World War II, the British pound lost its dominance, and the dollar took over. It didn't happen overnight. It took years of economic strain, war debt, and shifting alliances. But eventually, the system changed. Now ask yourself this. Could we be watching the early stages of another transition? Because multiple forces are colliding at once. Rising global debt, increasing geopolitical tension, trade wars, technological changes like digital currencies, and a growing desire among nations to reduce dependence on a single system. Individually, these are manageable. Together, they create pressure, and pressure leads to breaking points. Imagine a scenario where major economies start settling trade in other currencies. Demand for dollars falls, the US has to offer higher interest rates to attract buyers for its debt. That slows down economic growth. At the same time, imports become more expensive because a weaker dollar buys less. That pushes inflation higher. Consumers feel it at the grocery store, at the gas station, everywhere. Now layer in market reactions. Investors see uncertainty. They pull money out of US assets. The stock market becomes volatile. Confidence drops further. This is how a chain reaction forms. Not a single event, but a sequence. But here's the critical question. Does this lead to collapse? Not necessarily. There are different paths this could take. In a best-case scenario, the dollar doesn't collapse. It declines gradually. It remains important, but shares power with other currencies. The global system becomes more balanced. Painful, yes, but manageable. In a worst-case scenario, things accelerate. Confidence drops quickly. Countries move away faster than expected. Financial markets react aggressively, and what was supposed to be a slow transition turns into a shock. History tells us that financial systems don't always change smoothly. The 2008 financial crisis is a perfect example. It started in a specific sector, housing, but spread globally because of interconnected systems. What seemed contained wasn't. Now imagine a similar chain reaction, but tied to the foundation of global finance itself. That's why this topic matters. But let's bring this back to you. What does this actually mean for your life? If the dollar weakens significantly, your purchasing power could decline. Imported goods, from electronics to fuel, become more expensive. Inflation eats into savings. If interest rates rise, borrowing becomes harder. Loans, credit cards, mortgages, they all cost more. At the same time, certain opportunities could emerge. Assets like gold often rise when currencies weaken. Some international markets could benefit, and industries tied to exports might gain an advantage. So it's not just risk, it's also positioning. But timing is everything, and that's where most people get caught off guard, because by the time the average person reacts, the shift is already underway. So what should you watch for? Look at global trade patterns. Are more deals being done outside the dollar? Watch central banks. Are they holding less dollar reserves? Pay attention to interest rates and debt levels. Rising pressure in these areas can signal deeper structural issues. These are early indicators, signals that something bigger may be forming beneath the surface. But here's the twist. Even if the dollar loses some dominance, it doesn't mean it disappears. Power doesn't just vanish, it redistributes. The real question is not whether the dollar will fall overnight. It's whether the world is slowly moving toward a system where no single currency dominates. And if that happens, everything changes. Because the system we've relied on for decades, predictable, centralized, stable, becomes more fragmented, more uncertain. And in uncertain systems, those who understand the shift early have the advantage. So the next time you hear about trade deals, interest rates, or global tensions, don't ignore it. These are not isolated events. They're pieces of a much larger puzzle, a puzzle that could define the future of money, power, and your place within it. Because if the dollar ever truly loses its crown, the question won't be, why did it happen? The real question will be, were you ready for it?